Welcome to the Best US Investors Two Regular Guys show. I'm Trent. This is Mark. And today we're going to get into an analysis of the Mag 7 from a technical standpoint and point out a couple of things that maybe some people aren't really recognizing and how we're possibly seeing a shift in the direction of markets, all based on seven companies. So let's get going. Hey, Mark, how's it
How's it
going
going?
there in sunny Nebraska?
It is sunny today, but it's colder than it's not. It's
No.
9 degrees and snowed yesterday. We still haven't got as much snow as you've got there in the Panhandle of Florida yet this year. So we're hoping you
Yeah.
break our record, but it's cold and it's out doing a little shoveling and plowing yesterday and probably do a little this afternoon. But anyway,
No, thank you.
that's life in the big city. I mean, in the big country.
That's right.
Anyway, lots of stuff going on with this new administration. It seems like they've been in there a year already with everything that's going on. It's like 25 different things a day. You wake up, 300, three things have happened. By the time you go to bed, things are still happening, and it's not boring. So it's the effect on the market is, the market doesn't know what to do. And then, of course, we had inflation numbers come out, the CPI and the PPI, and they're both up, which we've been saying. We've been saying, for months now. Look, the inflation is going up, not down. The percentage of inflation is going up, and we
Right.
keep hearing the Fed and all the talking heads and financial channels say, no, inflation's been tamed. This and that. Well, if it's that tamed, why aren't we lowering rates? Why are we? We may have to raise rates, but that's for a different two regular guys discussion. But anyway.
Yeah.
So today we'll talk a little bit about what's been driving this market over the last couple of years, and it's been basically 7 to 10 companies, but seven for sure, and we all know who they are. And if you like this content, make sure you hit the like button and subscribe, to the Two Regular Guys show, because we're just two regular guys. Okay, we both have financial services background, so it's not like we haven't been in it for a while, and we just give you our thoughts, and that's all they are, thoughts on how we see things based on how we live our lives and our neighbors and businesses that we talk to. So anyway, that's what we're all about. So
Cool. Yeah, just
let's
hit the subscribe button. If you want to learn a little bit more about our services, just go to the bestofusinvestors.com service page. You can catch that link at the bottom in the description and learn more about what we offer for a very affordable price.
Yep,
So,
absolutely. Okay, let's talk about what we've been watching the Mag Sevens, which is NVIDIA, Meta, Microsoft, Apple, Tesla, Google, Amazon. If you want to add one, we've got Netflix in there if you want to do 7+1, and they've really been fueling the markets and the indices over the past several years, since probably the pandemic, and a lot of it it's been fueling. It's really got rocket fuel with the AI. When Chat GTP came out, everything started rocketing, and now, we've had massive spends by these companies to go and build data centers out and energy and this and that. And looking at it from a technical point of view, and other things out there in the macro view, I just wanted to give my thoughts on what I see, and see what you think, Trent. And also, if anyone out there wants to leave us a comment, that'd be great. Just keep it civil, which we
yeah.
love. But anyway,
Yeah.
a couple weeks ago, everything was kind of humming along, and then this little product called DeepSeek came out, and it's a 1-year-old startup, and it revealed a stunning capability. It presented a Chat GTP like AI model called R1, which has all the familiar abilities, operating at a fraction of the cost of OpenAI's, Google's, or Meta's popular AI models. The company said it spent just 5.6 million training its new AI model, compared with the hundreds of millions or billions of dollars that the U.S. companies are spending on their AI technologies. So I was looking at, I didn't know much about it, but this has been 3 weeks ago, so I've been looking at it a little bit. And there's a gentleman at the Naver's Future AI Center, and he's one of Korea's foremost AI experts. And his name's I'm gonna get this wrong, Ha Jung Woo. And he said this recently. They were having a conference in Seoul. He said this recently about DeepSeek. And again, he's an AI expert. It's a model. He says a model of this caliber is on par with AI's latest O1, OpenAI's latest O1. It's incredibly advanced. While we need more time to assess its real-world industrial applications and serviceability based on existing AI evaluation benchmarks, DeepSeek's R1 performs at least as well as O1. Its inference capability stood out to me the most. Again, this is Mr. Wu. For example, when asked how many people might be inside this building, DeepSeek doesn't simply regurgitate a memorized answer. Instead, it estimates based on factors like the number of floors, area per floor, and spatial utilization. Existing AM models struggle with this level of logical reasoning. The step-by-step analytical thinking was particularly impressive. And on top of that, China's Baidu plans to release the next generation of its artificial intelligence model in the second half of this year. And that's according to a source familiar with the matter, as newer players such as DeepSeek disrupt that segment. Baidu's planned update comes as Chinese companies race to develop innovative AI models to compete with OpenAI and other US-based companies. Last month, Baidu said its Wingku platform for creating presentations and other documents had reached 40 million paying users as of the end of 2024, up 60% from the end of 2023. So we are living in an exciting time. The inference cost basically can be reduced by more than 90% over 12 months, Baidu CEO Robin Lee said at the World Government Summit in Dubai this week. Also in Dubai, the United Arab Emirates said they're planning to launch a new artificial intelligence model inspired by China's DeepSeek, the senior official told the FP, calling the system's disrupting emergence fantastic news. Faisal Al-Banai, the driving force behind the UAE's Falcon large language model, said DeepSeek's challenge to American tech giants showed the field was wide open in the race for AI dominance. The UAE launched Falcon in 2023, a large language model that compared favorably with industry leaders, including OpenAI's and ChatGPT. The oil-rich Gulf monarchy is betting big on its transformational technology as a part of its push to diversify its economy away from fossil fuels. Not to be left out, in Europe, yesterday or this week, music was blaring and people were cheering at the Artificial Intelligence Action Summit in Paris on Monday as French President Emmanuel Macron declared France is back in the AI race. The bold call comes after Macron touted a 109 billion euro, which is 112.8 billion investment in AI in the country. But it also underscores Europe's desire, led by France, to be a part of the conversation around the AI leadership and innovation that has far been dominated by the US and China. Alphabet CEO Sundar Pichai says Chinese startups DeepSeek has done very good work and showed that how global artificial intelligence is progressing. More competition creates better product at lower prices. So what I'm seeing out there is it's not just, Meta or Alphabet or Microsoft. All of a sudden, there's competition popping up everywhere. And with competition comes innovation. With innovation comes cheaper cost. So what I'll talk about in a little bit is how much money these companies are spending on Mag 7s, and do they really need to do that? And what's the effect in the future? You got any thoughts before I move on, or my little rant?
Yeah, absolutely. I think it's naive to think as as an American that nobody else has this capability of developing these type products. Where we've seen that, Tesla came about, dominated the electric car market, and then China has come out and they have dominating China when it comes to that because they can control what comes in and out. But their technology is racing up pretty quick. And I think it goes back to how technology will accelerate no matter where you're at in the universe or in the world. China can easily duplicate something we've created, but they're also as smart, they're human beings as we are. And so maybe their approach to how they're solving these problems, as we're seeing with DeepSeek, and I have actually used it and actually use it through my Perplexity subscription. And to watch it reason, it actually shows you talk. I mean, it puts in text how it's going about coming up with an answer. And I'm like, wow. So I think we should anticipate, especially with AI, that it's going to come out of everywhere and that the cost to do it is going to come down, especially, you know, I mean, most people can't afford a $2 billion or a $10 billion data center. So just out of necessity, they're going to develop products. People are going to develop products that are cheaper and cheaper. And like you pointed out, this thing is going to get down to where Joe next door's son is sitting in his bedroom and he's writing a model that will challenge OpenAI or Amazon or whoever else comes up with it. So it's exciting because it will get cheaper faster, for sure.
And I think what the more I read about DeepSeek is they're using software more than anything to do the learn process of AI, instead of these big data centers. And down the road for me, they're building a Google data center. I was talking to some guys who were working on actually building it last night, bringing in rock and they've run us the local quarry out of rock. They've run out of cement. They're building, this is just the first building and they can put 7 of these up there. And so what I'm thinking is is the technology going to move so fast that by the time they get these things built, they don't really need them? I don't know. I don't know. But Wall Street's looking at the same thing. So these developments that we're seeing around the world have raised serious questions about the elevated valuations of AI stocks and Silicon Valley's business model of massive research. So, these stocks are so highly valued, to forward earnings. And if there's one little glitch, okay, earnings or something happens, the stock price could just fall apart. Now, so I'm just we're always trying to look ahead, what could possibly happen. So the potentially groundbreaking open source tech has called into question the gargantuan AI investments made by these American companies. The Magnificent Seven, okay, these are a group of Wall Street's biggest companies by market cap, now account for a third of global market value compared with around a fifth 2 years ago. This means that the performance of the S&P 500 is increasingly tied to the performance of the Mag 7 companies. The Mag 7 combined market cap in the NASDAQ 100 is significantly higher than in the S&P 500. It often hovers around 40 to 50%. This means that the NASDAQ 100's performance is even more closely tied to the fortunes of these 7 companies. So recently, AMD reported better than expected results on top and bottom lines, and AMD is not a Mag 7, but it also reported data center sales of 3.86 billion. That reflected a 69% growth from a year ago, but fell short of the 41.14 billion in sales expected by the analysts. Shares traded at a 52-week low. They're on pace for their worst session since October. So see, you can have this great growth, but if you don't meet the expectations, you see what can happen. And this is just AMD. Okay.
Right.
So as we've been talking about, for a while, you and I, market momentum has been riding the coattails of the Mag 7 stocks for the past several years. And as go the Mag 7, so goes the market. So I'm going to show you a chart that shows multiple manias over, the past 60 years, when market bubbles formed over several years, only to collapse by 50 to 80% after the mania subsided and the hype machine ran out of the expert hot air. The current Magnificent Seven mania has put all the other manias to shame. Stocks are up by a factor of 30. By comparison, the NASDAQ 100 went up by a factor of 12 before the dot-com collapse. The Magnificent Seven 10-year share price increase are Amazon up 1,027%, Apple up 1,294%, Google at 586%, Meta's up over 1,000%, Microsoft over 1,200%, NVIDIA up over 38,000%, Tesla up about 4,000%. So let me show you a couple things here.
Go ahead.
Okay.
There's something interesting, just a side note while you're bringing that up.
Go ahead.
NVIDIA has only been in the top 7 since 2023. So as fast as it is accelerated, could that acceleration on the downside be the same?
It could be.
Yeah, but it's interesting how the dynamic of the top 7 holdings in the S&P 500. I have a list and I'll post it up here on the video going back to 2000 and how dynamically this has changed from, in 2000 the top position was, bear with me here, General Electric
Yeah.
was the number 1 holding in 2000. Pfizer was second, Citigroup, Exxon, Walmart, Microsoft, and Intel. And look at the dynamics. It's how crazy this has changed in basically 25 years.
Look at going back to 1960 on this chart. You had the Nifty
Oh,
50,
wow. Yeah.
boom. Okay, in the
Wow.
1970s, we had gold. Okay, and the Nikkei, in the 80s and 85. Then, of course, the NASDAQ 100. Okay, this was the .com, boom.
Yep.
Then we had oil in 2000. And then here's the Mag 7. You can see where we are with the Mag. And this is just the 7 of them compared. Okay.
Wow.
So if we go over to this chart, this is the return since December of 22. And this is kind of goes to what you were saying. This line represents just the Mag 7 return. This line represents the S&P 500 return, 57%, okay, compared to 148. If this is the remaining 493 company, only 35% since for 3 years, okay? So take that out and look what would happen, basically. So, and that's what we just looked at. The S&P is up 57% in the last 2 years, while 75% of that gain can be attributed to those 7 stocks. So you never know what's going to trigger, a downturn or a collapse. But once irrational exuberance turns to irrational fear, watch out. The fear produced by DeepSeek a couple of weeks ago sliced 20% of NVIDIA in a few days. A recession or investors regaining common sense may be enough to trigger the next stock market downturn. Okay. So when we think about it, NVIDIA hasn't reported earnings yet. I think that's next week. Okay.
28th, I believe.
Okay. And however, it's been hit by a double whammy of China's DeepSeek offering apparent low-cost AI, plus all the others that we do see that's coming out, and reports that the administration is weighing additional limits on the sale of company chips to China. Many of the Mag 7 companies have now reported earnings, and what have we learned? Investors and traders were looking to Microsoft and Meta to provide reassurance that they'll keep spending heavily on NVIDIA chips to power the future AI services. They only got part of it. Microsoft beat expectations on top and bottom lines. However, Microsoft executives said the growth of its spending on AI data centers would slow next year. Azure revenue growth slowed to 31%, below the 31.8 expected, and the slowest in a year. Google shares dropped about 7% in pre-market trading the day after they announced, as investors were disappointed by the company's slowing cloud growth and concerned that its hefty investment to build artificial intelligence infrastructure. Google's revenue from its cloud business increased 30% to $11.96 billion in the fourth quarter, less than the 35% in the third quarter. Again, we're looking at, hey, that's a nice looking growth, but it's going down percentage-wise. We see the same thing in the NVIDIA. Okay, right. And that causes people and investors to start looking at, okay, are you overvalued? Okay, when are we going to start seeing these returns go the other way? So look at those when you see these earnings come out. Okay, it was also slower than biggest rival Microsoft's 31% jump in the quarter, but more than a 19% increase that cloud maker Amazon was expected to post. We'll look at Amazon. Still, despite edging out Google's Microsoft Azure cloud platform, growth was smaller than expected. So when you look at Alphabet with Google, their ad business is grappling with fierce competition, okay, from a flock of dynamic social media platforms such as Facebook, Instagram, and TikTok. Alphabet's also been heavily investing in infrastructure to enhance AI research and integrate it into its products like search and cloud services. But its plan to pump in $75 billion towards those efforts this year was 29% higher than Wall Street's expectations of about $58 billion. Okay, so Dan Coatsworth, he's an investment analyst at AG Bell, said Alphabet was punished for missing quarterly revenue expectations for the first time since February of 2023 and for heavily spending on AI-related projects. He went on to say investors expect flawless execution from tech giants, yet weaker than expected growth in cloud computing implies the AI craze isn't automatically turning into big bucks for infrastructure providers, he added. Alphabet's Google operations have been king of search world for several decades. The evolution of AI now threatens to knock Google off the top of the mountain, Cosworth said. According to Coatsworth. According to Coatsworth, the $75 billion guidance for capital expenditure was equally worrying. Previously, large capex would have been taken as a positive sign that Alphabet was doing everything it could to capitalize on a hot AI trend. Now the reverse is true. This increase in capex by Google probably is why the Nvidia stock went up, because Nvidia is probably the beneficiary of all this money going in. And the question
Right.
becomes, do they need to be doing this? Are they going to get a return? What's your thoughts?
I I think that's the biggest disconnect between the fundamental elements of markets, of companies, versus what the stock market does. I mean, you think about when DeepSeek came out that Sunday night and everybody got their panties in a wad and Nvidia opened down like big time, like it was a big
20%.
move,
Yeah,
17%, I believe.
yeah.
It shows the short-term thinking of that company. Is Nvidia overvalued? Absolutely. I totally believe that. I think it had a PE ratio on that day of over 60. And for a tech company, it should probably be between 25 and 35 would be reasonable, you know? So yeah, I think the need for the one thing I want to come back to is there a need to build out these data centers? And I guess I look at the data center as this is the train station of information coming in and going out. And without the capacity for this all of a sudden available information to go from point A to point Z, you've got to have train stations to transfer that information. You got to have power to generate the results that you ask it to do. And so that's how I look at these data centers. Are they the models like DeepSeek has created or OpenAI has created? Is that the model element? Well, you got to have a place to store it. Absolutely. So maybe that is a data center storage element. But I think, is it wrong that they're spending all this money right now? I don't think so. Maybe they could cut down and reduce it. But I think what is more interesting to me is that there are other companies or people who are generating products that actually will challenge the first guys through the door. And we're now seeing how not easy, but how easy that can happen and how fast it is. So I think overall, of course, you're going to balk at $775 billion spend on OpenAI. Absolutely. Because it's just a ridiculous number. But was it necessary for that to happen to get what we're getting now? I don't know.
I don't know.
But I will say, if Wall Street believes that they're going to monetize this in a matter of a year or two, come on. No, no,
No,
not at
because
all.
look at what competition's doing already at the lower cost. Okay,
Yeah,
so I think all these earnings came out, and they're still going to spend. I think we may get revisions on the spending, or maybe not, but they're going to second guess it, because if you look at Meta, they beat Wall Street expectations for fourth quarter revenue, but predicted sales in the current first quarter, which we're in right now, may not meet forecasts, sending mixed signals about how it bets on pricey artificial intelligence powered tools paying off. So that's just exactly what we just said. Okay.
yeah,
But Mark Zuckerberg said, that's too early to judge that DeepSeek's advances mean that heavy capital spending on AI won't be necessary in the future, and vowing hundreds of billions of dollars worth of investment in the long run. Okay, well, this is the guy that did the same thing in the metaverse and had to reverse, because look what that did to their stock when they did that in the metaverse,
right.
because they spent all this money expecting a return and they never found the return. Okay,
Yeah,
so it's going to be interesting. I don't know if how they're monetizing, AI right now, but if they don't do it soon and other
yeah,
companies are doing it, it's got to affect their stock price. They're going to have to, those valuations are going to have to come down. And also, Meta is talked up its use of in-house chips, which is developed with Broadcom, as a replacement for some of the servers powered by NVIDIA. So NVIDIA has competition out there too, within that
right.
space too.
Well, you got to wonder, how quickly can you monetize and become profitable on a product that you're charging $20 for? I mean, if you've spent billions of dollars, developing such a product, and your average cost for subscription to these products is $20, how many people have to subscribe on an annual basis to get that back? That's a ton of people. And my question is that happening? Do most of your friends subscribe to one of the AI? No, I do. I happen to subscribe to like two different ones because of two different purposes, but I don't see a lot of people going all in on, hey, I need this in my life. I need to spend this money to get it, you know, then it
I
becomes
think
monetized.
yeah,
I just don't see it
most people,
happening fast.
most people, if they have a question, uh, can't see it, pick up their phone
Yeah, yeah,
and they just ask Siri. Okay, and they don't pay
yeah,
anything other than for the cost of their phone and their phone service.
right.
You can figure out who won the Super Bowl in 1978. When you're talking to your buddies,
Yeah.
and
Or
that's
you
I
just
don't need
Google it.
yeah, I don't need to go and have a service to tell me any of that. So you're absolutely right. What they Kerry calls the TAM out there for this product, and when you've got all this competition, it's not like it has a monopoly anymore.
Right.
All these companies have this now. So, I
I
mean,
actually, go ahead.
no, go ahead.
I got in a discussion today with my brother-in-law about just this evolution of AI and what's happening. And I pointed out, it's like 8 out of 10 don't get it. They're just doing the same thing they've always done. There's two who get it. And of course, they're going to accelerate their progress so much faster because they're adopting this new technology. Whereas 8 out of 10 Americans I'll just Google it, you know? And so they're not using the capabilities of this new technology. And that's where I go, everybody's thinking that this is going to be a mass adoption, quick monetization of this product. I go, 8 out of 10 people are just trying to get to work on time. You know, I mean,
Yeah,
it's really not that. I don't know, and that's where I go. This is going to accelerate. The possibilities are going to accelerate, and 2 out of 10 are going to get, it, and they're going to capitalize on it. The other eight are just going to exist until they're forced out of it. I mean, you think about the evolution of the internet. Same thing, internet's been around for a long, long time. I mean, what, the
well, I mean,
60s?
same thing in computers. Okay, when the computer first came out, there were computer companies everywhere building, all kinds of Atari. Remember Atari and all that?
Yeah.
Remember Gateway up in South Dakota? I mean,
Oh,
there were
yeah.
just, and then you had discount brokerage, and when the internet came out and people could start trading online, there were hundreds of discount brokers out there. I worked for a company that my job for a couple of years was to go buy them, buy the
Yeah.
accounts, and now there's a few. I mean, you got
Right.
Charles Schwab, you got E-Trade, who's been bought up. Schwab bought up Ameritrade, and you've got, Scott Trade's gone, National Discount Broker's gone, Daytech's gone, and all the other mom and pop shops are gone. That same
Yeah.
thing, you know, and that's just the way the world works, eat or
Yeah.
be eaten, you know.
You think about this AI, this whole DeepSeek, and Alibaba's coming out with a model, and all these. If you go back in time towards the .com period, doesn't this remind us of like 97 to 99? This acceleration of all this coming to market, but in a matter of a year or two. It's which tells me if that history repeats itself, 2000 is going to be a whopper of a year. Uh, the
2000,
version of 2000,
yeah.
today's version of 2000 is going to be a pretty big whopper.
Well, you saw how high that chart went, in the Mag Sevens,
Yeah,
so, and that's why I'm talking about it. Like Tesla, for the fourth quarter, Tesla reported revenue of 25.7 billion. That was short of the 27.2 expected. Okay, and just up 2% from a year ago. So you see the revenues are slowing down. In operating income, totaled $1.58 billion. That was down 23% from last year, while adjusted net income rose 3% to 2.6 billion. Well, you know, Why was that negative? Well, operating income was negatively impacted by costs associated with artificial intelligence and other R&D projects, as well as lower average selling prices for its current vehicles. Why are they having the lower cost? Competition's coming in for Tesla. You got a bunch of Chinese cars, and people have a choice now. Same things happening in AI, in my
Yeah.
opinion. Okay. So Tesla said expects capital spending to surpass 11 billion this year and in the next 2 fiscal years. In October, the company had projected spending between 8 and 10 billion. So they're looking to spend more too. Okay, you spend more, and your revenue and your operating income and your net income go down. Okay,
Yeah.
how long will investors and the street allow these extreme valuations to keep going on their stock price without any returns? Okay, so I mean, when you look at it, Amazon, let's look at Amazon. Amazon stock tumbled in the aftermarket after they missed Q4 cloud revenue and also guided well below estimates. It was the company's guidance that led to after hours drop in the stock. That's because the company projected profit and revenue in the current quarter, both of which came in below Wall Street expectations. Net sales, 151 billion to 155.5 billion, below the estimates of 158.64 billion. Operating income, 14 billion to 18 billion, below the estimate of 18.24 billion. If accurate, that would mean Q4 revenue will grow at the slowest pace since the global financial crisis, and that's for Amazon. Okay, NVIDIA
Wow.
hasn't reported yet. Okay, so the news from DeepSeek threw a wrench into the whole Mag 7 machine a couple weeks ago. Do these companies still need to spend so much on capex for AI, or is there a better way forward that's less capital intensive? With year-over-year declines in lofty revenue percentages, along with increasing costs, how long will investors keep paying for Mag 7 pricey evaluations? How will this affect the indexes? Many average Americans invest in the stock market, via ETFs like the SPY or the Qs. If earnings expectation, these 7 stocks comprising over 35% of the S&P's market cap falter, can the rest of the 493 stocks in the index make up the difference? To do so, the earnings will need to go up significantly. We saw that chart. The 493 are down here. It's got to go up a lot. Now, all
Right.
earnings are not negative. Okay, we've seen some good earnings, but a lot of the earnings that we're seeing is not fantastic from the other 493. And so
Right.
that's my thought is you better watch out. We can look at a chart or two, but we've been seeing sideways to downward motion, on these Mag 7s for quite a while now. Okay. So
Yeah.
is this the start of something bigger for the whole market? I don't know. But all I know is there's a lot of history, when you go back and look at what happens when a small amount of stocks or companies dictate, the direction of the market, and it usually doesn't turn out very well.
No, and I think you and I have witnessed that through a number of market rises and crashes. When I look at from my perspective, I use more of a quantitative model, and I look at there are basically 2 companies that are above their quarterly trend line, which I use the 62 day simple moving average, and that's Meta and Amazon. And but yet Amazon is more on the edge of not. So it's whereas Meta continues to go higher, it looks fairly strong. Everything else that I'm looking at is in a downward trending environment. And there's a lot of space between where they're at today and just using the simple, the 200-day simple moving average. I mean, now granted, a lot of them are actually below the 200 as well. So there's a lot of potential downside in a lot of this. And I think from a risk management standpoint, you better perk up and take a look at your risk exposure, because this one to me is bigger on the sense of the crash capabilities versus the pandemic versus the housing versus .com. This thing is so much more leveraged up, probably what, 10, 15 times more than any of those. And it's because of all this excess money we have printed and injected into the system since 2020. All that will reset itself at some point.
Yeah, and on top of it, we've got new things out there. We've got the debt that just keeps going up. Now we've got tariffs, potential tariffs, okay, and reciprocal tariffs. What's that going to do to these companies? And if they source overseas, what's it going to do? It's so there's a lot of variables out there. So like you said, now is the time to risk manage in your account. Can you
Yeah.
afford, are you close enough to retirement that you can afford, a 20-30% drop in your portfolio? Okay, so
Oh,
think about it. Ask if you're in a financial advisor, go talk to them. And remember, if he says, time in the market is better than timing the market, and that may be true. But if your time scale on the other end is 5 years or 2 years or 1 year, you may want to take a little and put it, into some safety, flight to safety, as we call it. And what do you got to lose? What's the chances of these things skyrocketing even higher where they've been compared to where they are now?
the
So
way
that's,
the way they would skyrocket higher is if you doubled the money supply again,
and
meaning
that's not going
you
to happen.
that's not going to happen.
The money supply is dropping right now. Yeah.
Yeah, it is shrinking. And
Yeah.
I guess I look at this and I go back to 06 to 13, and that was 7 years, right? So in that time, people lost anywhere between a minimum of 10 to 80% of their value in their portfolio. And if you're 55 or 62, it took almost that length of time just to get back to even again.
Mm-hmm.
7 years. Do you have time to do that now? I mean, you'd be 70 years old before you'd started to gain again. That's, to me, that is a lot of risk. And I think that's the one element of the financial advisory world is not taking into account is these people, which majority of most investments invested money in the United States is those over 55 years old. I think a big chunk of it is those over 65 years old. Do they have the ability to recover from a 10 to 50% decline in their portfolio? And the answer is no.
Well, well, on top of the monetary inflation that's taking away, 8 to 12% a year on their, uh, you know, their money. You've got to make that much, but
Yeah,
you take a drop of 20% on top of the 11, you're already losing, and that's bad. I mean, and all you have to do is go to the store, look at inflation. The reports came out, inflation's going up. Okay, the percent of inflation that everyone tells us is under control, and if it's so under control, why hasn't Powell lowered interest rates? Well, you know why? Because inflation is going up and he's worried about employment. Because the employment reports that we're getting, if you dig into them, most of it was immigrant employment. Okay, it wasn't
yeah,
permanent American citizens, and most of it was part-time employment, people having too many jobs. Now you're going to look at Chevron, just came out yesterday. They're going to lay off 3,600, 4,000 people. Meta's going to lay off, a certain percent of their staff too. I mean, these are tech companies. Okay, where are
yeah.
they going to go? Who's hiring? Okay, they're spending so much money on the AI. They're not going to go out and spend more money on employees. They're going to be more efficient. And where do you get your efficiency? You cut jobs.
Right. You
And
do. And
so
that's your,
put it all together, and just all I'm saying is manage your risk. Okay.
well, yeah, absolutely. And I think, with the Platinum channel, we focus on that risk management element in a big way. I think for the last year and a half, you and I have been talking heavily about what's realistic when it comes to valuation of a company. What's the realistic of a hockey stick move or a banana curve move
Yeah.
in a market, and how long can that last? And I mean, we've all been around for a while and we've experienced, most people have experienced, like 3 4 market declines in the last 25 30 years. This is no different. We're just leveraged up way more than we have been historically. And I think that's just, in looking at these companies, one thing I look at is they, yeah, Nvidia's up today as we're recording this. I think it was at $135 today, but it's hitting this resistance level. And you put out a charts of interest newsletter in our Platinum channel newsletter every morning, and you had the indexes along with the Mag 7 and plus one Netflix, and they
Yeah.
all look, if you took the name off, you'd be almost looking, thinking, this is the same chart. And
Almost. Yeah.
yep, and Nvidia is bumping up against this resistance level since October, I think it's been.
Yeah.
So it's telling you something. It's telling you something, and I think it's telling you we're tired. It's time to get my money out of this. And that's what big institutions do.
Well,
They
again,
mine their profits.
it's not financial advice, but big institutions don't set their money somewhere and just keep it. I mean, even Warren Buffett's trimmed back on Apple. Okay, his biggest position. Why did he do
Yeah,
that? Why does he have $325 billion sitting on the sideline right now? The most he's ever had.
yeah,
Okay. Well, it's not because he's making more money on it, at 4.5% in treasury bills. He's waiting for something. He can't find anything that as a value investor that he wants to buy at the price that it's at right now. He's waiting for the sale.
right. And he's waiting in a tool that actually isn't beating inflation. So to me, to him, if I'm interpreting his actions, he's willing to take a loss due to inflation just to be ready for that big opportunity.
Right.
And he's done it a number of times. And,
Yeah.
and that's why he's worth what, $148 billion now. I think his
That's
number
why.
went up 6 billion just
Well, I
recently.
mean, that's why Berkshire Hathaway is one of my long-term investments. You
Yeah,
know,
yeah,
on that side, he's golden. And I want those kind of people working for me. Doesn't mean
yeah,
a stock can't go down. It's gone down, but over the long haul, mostly it's beat the S&P all the time. So why not? You know,
right.
and it doesn't
Yeah,
cost me. It doesn't cost me any fees. Okay, like an ETF. So
yeah,
again, you got to look at where you want to concentrate your money. I have money in treasury bills too. Okay, sitting, and it's better to make 4.5% than it is to set it in your bank account at 0.25%.
right.
So and you put it in
Plus,
30-day treasuries. It comes up, and mine rotate every Tuesday. I have a cash supply come in, and I can either route it back into treasuries, or I can use it to put it to work somewhere if it comes back. I can swing trade it if I want. But
sure,
even swing trades right now, there's not too many good setups. We had some, but not like when everything went up. You've got to be,
yeah.
it's a stock picker's market. It's certainly going to be interesting, especially with this administration and what happens.
Oh my gosh. It's like every day, it's like the apple cart's getting turned over. I'm
Yeah.
like, holy cow, what are they going to find next? And I think that's the other thing is if they are successful, not to get too far into the politics of all this, in reducing our expenses as a country, we become more profitable, which then that profitability can be deployed back into the country to grow it again.
Back
And
to us. Yeah, it can come
yeah,
back to us, and you can use your money a lot better than the government can, in my opinion. And we had a video about that you put out yesterday. We
yeah,
talked all about Doge, okay, and just interesting stuff.
yeah,
So hopefully everyone finds this discussion that you and I have helpful. We're just again two regular guys, and you're down in Panhandle, Florida, and I'm up here in the flyover country. But we get a lot of exposure to real life that you don't hear from CNBC or the left coast or the East Coast. Um,
right.
and those people live in a different world. The people in Washington D.C. live in a different world than we live in. People in New York, people in the big cities in Southern California, they live in different worlds than we do. Okay,
Yeah.
the most of the country lives in the real world. My opinion.
Oh yeah. And I think like I said earlier, 8 out of 10 people are just trying to get to work on time. They're just trying to make the bills.
Yeah, trying to make
And
it. Sweet.
yeah, and most times, and I've noticed this when I was a financial advisor for 20 some odd years, most people are just like, just I don't have time to even think about how to do it. And I think that's where we can help those people create a process to help them get where they want to go and not suck up all their time in the day to learn how to do things, but how to better risk manage and preserve their capital for
Well, not to
sure.
mention our community is that is very active. Both on the Discord in our live and on our Zoom calls on Friday, that they're from around the world, and we get views from people in manufacturing companies, people who are in the car business, people who are in all kinds of businesses around the world.
Yeah.
What's actually going on. So it's really cool.
So, okay, Mark, I gotta just hit upon this real
Uh-oh.
quick.
What'd I do?
No, not you. So Bob, the Bolt guy,
Yep.
when we made our platinum channel tribe portfolio, Bob came in with Walmart, and nobody came in with a company like Walmart. And he made the comment that Amazon is going the way of Sears. And I was like, that's crazy. So I'm in New Orleans right now. I'm here for my wife's doing a workshop, a art workshop, and I was talking to my sister-in-law, and I was like, "Those are really cool shorts." She goes, "Yeah, they're Reebok shorts," and she goes, "I got them at Walmart." I'm like, "What?" Like, that's crazy. That's like a big time name brand company at Walmart. She's like, "Yeah, this one we have here is all this and all this really nice stuff and blah blah blah." And I was like, "I want to go." So yesterday we went on a field trip, and we went. This is in New Orleans, right? We went to this Walmart. I'm like, Mark, I'm like, I haven't been in a Walmart in a year. And I'm like seeing brand products right there. And then I see this section of this mega Walmart, and it's all of their one day turnaround order stuff. And it's people going through the store picking, and then it's being delivered to the house. And I was like, wow, this is really, it's not boxed up like an Amazon package, but it's in like a Walmart bag. And they deliver it to the front door and they drop it off if they have it at that location. And I made the comment, I was like, this is interesting because as a Prime Amazon delivery truck went by, she goes, yeah, I ordered something from them a week ago. I was supposed to have it in 2 days. And now they're telling me it's going to be another 3 days. And I got to thinking about all this. I was like, we are starting to see a shift between Walmart and Amazon. And that brings up the question to me is, what is Amazon becoming? Is it becoming still the place where I go and buy a consumer product? Or is it becoming a AI? Are they transitioning their business from consumer to enterprise to bigger and more profitable items? And it's interesting, just this dynamic change that we're seeing because of AI. But it also comes in and says, Amazon, I believe, gets what, 80-90% of their profits from AWS versus their consumer product purchasing,
And
us buying on Amazon.
I think AWS has been, been going down, and
Oh, has it too? So
yeah. But again, I don't disagree. I don't go to Walmart's. I don't like going to places, but I do go to Sam's Club, which is owned by Walmart.
yeah,
Okay. Um, and we pay yearly to do that, which is
yeah,
another interesting aspect, to pay to go shop somewhere. But
yeah, that is
if you calculate it out on what your needs are with gasoline and everything at the end of the year, you make that back up. Okay.
right.
Yeah.
Yeah. I think we are in that, looking at the Mag 7, even Netflix, we have had a massive valuation increases in these stocks over the last 2 years. It is, gravity will take effect, and it is taking effect. And I think looking at the charts, looking at how these things are lining up, I see, it's a pullback at some point. It's just what causes pullback. Pullbacks, events. Events cause of those. So something's coming. I don't know. Maybe it's Nvidia's earnings. We'll see.
Could be. Definitely DeepSeek has thrown a wrench in it, and we'll see what happens. But it
Yeah.
also lit up other competitors in other parts of the world who want to be a part of this, and challenge our big tech companies. We'll see how it goes.
Yeah,
See
absolutely.
how
In
it
the
goes.
meantime, protect your assets, protect your
Yeah,
wealth. Don't be, oh, this is never going to end, because it will.
at some
Some
point.
way or another, it comes to an end. Well,
Yep.
Mark, anything else you want to hit on?
No, I think we got. I think I've ranted enough in the last couple of days, and get ready for tomorrow's Zoom meeting with our subscribers, and
Yep.
let them do a little ranting for us.
Absolutely. And so just to let you all know, we host a 11:30 a.m. Central Zoom call with our platinum members. And this is where we get into the technicals. We look at charts. We discuss as a group different aspects of what's going on in the market. And luckily, as you're going to see this afternoon or this evening, you can sign up for our 14-day free trial, and you can jump in on the call as well tomorrow at 11:30. That's Friday. Tomorrow is the 14th, Friday the 14th.
Valentine's Day. Don't forget.
Valentine's Day. That's right. Thanks for reminding me of that. And we can you can definitely jump in and get a little taste of what we do on our calls and the dynamics, and be a part of our growing community, and do it for free for at least for 14 days. So hit the link in the below in the description. Hit our like button, hit our subscribe button, check us out at Best of US Investors. And if that's it, we'll see you next time on the Two Rigor Guys show. So have a wonderful day. Always live loud. Peace. See you later.
And cut.
There we go.